Hello guys, welcome back to another Lumley trading video. In this one we're going to be doing some in-depth stock analysis on AMC. So to get straight into it, obviously one of the key things we do want to note first is how has it moved really over the past month, because in all reality the past month has actually been quite strong on AMC, pushing around 70% within about a month. Obviously we have the last kind of week really been pulling back. Now if you were someone that's more long bias on this stock, again, it's kind of disappointing to see. Yes, this may be a temporary pullback before continuing higher, but really, if we're going to flip kind of temporarily bullish on this stock, $13 is what I'm paying attention to, because obviously this is the big gap kind of location. I believe this was all off the 8 preferred shares being released, but if we can break this $13 level, then there is definitely some opportunity to be probably traded, because if we start breaking through here, a lot of stops are most likely going to trigger just above this level, probably get a good pump, and we'll try and fill that gap. So really that's the main thing I'm looking at AMC, from the $13 move to around 18. So I mean really good upside if we can get into this sort of trade. We're looking at around 35%, and obviously on this I wouldn't be having a massive stop, maybe 50 cents to a point, and that would be the main trade I'd be looking at. Now, what are we else paying attention to? Because you'll know if you watch this channel, overall I am kind of bearish on these kind of stocks. So small caps in general, they're usually quite bad stocks and usually overvalued on a fundamental basis. So seeing this, obviously AMC not really worth anywhere near this price to share. So overall, not something I'd be looking to hold long term, because obviously we are sitting on support on both the 6 months and the 1 year at around this 560. So if we start to break back below this, a good indication that we'll probably break back below that 52-week low of $5. And if we break that, we're going to struggle to find support, because the only statistical levels we have is at 20 cents. And obviously very far off from where we are now. And even though I'm quite bearish on these kind of stocks, I wouldn't be looking at kind of 30 cents as a target, because it's just quite unrealistic. So what would I be looking to pay attention to instead? Really, it's just going to be the key psychological levels is what I'd be paying attention to in AMC to the downside. So $5. Obviously, if we hit that the first time, expect a temporary bounce. Considering we've been close to there before, I would be looking at that way more as a scalp than kind of a longer term trade. But looking at the same thing, coming into $4.50, $4, $3.50, $3, and so on. Any of these key psychological levels will be potential bounce locations, but also could be reversal locations. Obviously we can see, especially coming into the whole dollars, that was its previous reversal level. And again, if you come down to here, it's probably $8, quite near to a psychological level. So again, a lot of these things they're going to be nearly on psychological levels, and especially if we don't have standard deviation channels, that's probably going to be our best kind of indicator to go off of. So that's what I'll be paying attention to the downside. Now if we continue back to the upside, obviously I'm not really looking to touch this stock all that much to the upside. Maybe get a potential short at $11. I'd look to play that pullback, and again hold some size in case it's a reversal back down to its statistical mean, and then wouldn't be trading between the areas of $11 and $13. If we can break out of $13, I'm going to be looking at this only as a day trade. Again, not something I want to be holding overnight, because I don't like holding these sort of stocks overnight. So definitely, unless I'm maybe swinging it with options. But if I'm holding outright shares, going to be in more of a day trade. I'm looking at if we kind of break this $13, I'm expecting stops to get triggered. I'm expecting a good move to the upside, and that's what I'd be looking to play. And then again, we'll have some sort of a target at $16.50. Again, looking to play a bit of a pullback coming into this level. And then if we did push all the way to $18, I would flip very bearish at that level, because not only then have we filled the gap fill, but we have also come into our second deviation on the 1 year. Obviously as well, filling that gap is going to be very difficult, because it's not the same fundamentally as where it once was. Again, the issuance of the 8 shares is what has made the big fundamental change from here to here. So obviously past that I would be flipping. I mean, even at this level I'm a bit more bearish. Again, probably wouldn't look to trade it bearish, because there's kind of more risk to reward. But really from 11 and above, I am obviously going to be a bit more more bearish on it. But really 18.50 is where I would probably hit in with quite heavy size. Looking definitely to trade that through option outrights and just spreads in general. Now, if we did continue up for any reason, we do have final resistances coming in at 22, 25, $27.50 and a final level at $31. So again, a lot of levels to both the up and, well, more levels to the upside, but levels both ways. Now, do you need to pay attention to all of these? No. Really, it's just always paying attention to where you are now and what's the next opportunity. We're sitting at $6. We're paying attention to, obviously, $5.60 if we break this. We're then looking for a move to $5. How do we play the levels? Obviously, the first time you hit it, expect a bit of a bounce. Obviously, don't play that bounce on this level. We've already hit it. But if you break through it, then obviously you get a bounce the first time is what we're looking for. Then if you retest it and break through, what we're then looking for is a retest and then a move to the other side. Obviously, you need to be watching. If you break through, come back to retest it, you need to be seeing basically selling pressure come in. Now, there's two ways you can kind of judge this. That's either looking at it from kind of an intraday place, looking maybe at the level 2s and kind of just even things like bookmap and just seeing where the heavy layers of resistance are. Are sellers kicking in? Now, if you struggle a bit more, you're getting more used to that. Another way you can look at it is more by just kind of breaking the low. For example, if you break down to 530, come back to retest 560. If we break the 530, good indication we're going to continue lower. And that's another way you can kind of tell if selling pressure is kicked in, or maybe an area where you add in more size. But that's really how we're looking to play these levels. First time you touch it, for example, with break to the upside, first time you hit it, look to play the pullback of $11. Then if you break through, then I'm looking on that retest for a breakthrough, come back to a retest as a support, and if that holds, then I'm looking to flip more long bias on it. Now, I hope you enjoyed the breakdown on AMC. If you did, why not drop a like and subscribe, and check out one of these two analysis videos.